But when we look at the health chart of the China-Africa relationship, one of the things that we noticed was that foreign direct investment from China to Africa fell sharply last year. That may be in line with the fact that the Chinese economy, again, is slowing and there's some difficulties at home. But also when we look at the trade numbers, yes, they went up about 1.5%. But still, the bulk of the trade between China and Africa for exports from Africa to China is concentrated in just 4 or 5 countries, and mostly they're extractives, coming from oil, cobalt, minerals, and things like that. It's not a healthy relationship across the continent, and imports from China to Africa went up a lot, causing pressure on trade deficits and also making it more difficult for African countries to industrialize because so many low-cost products are coming in from China. When you look at those facts and those statistics, how do you kind of interpret them in terms of the health of the China-Africa economic relationship?
So first, when you say China import from just several major countries, this has been the situation for long term. Right, so this is actually Africa's economic structure. They decided that, and it's not a new phenomenon. And when it comes to China's export, actually these are not low-cost ones. These are actually Chinese, mainly a lot of machinery, and actually that's related to the investment because China. Actually, we know that in Africa, now China have this Transition and even BYD. They are setting up factories and projects in Africa. This all, and also a lot of renewable energy. Like in Morocco, we see a lot of the green solar power panels and the investment. And also these industry zones in Africa invested by Chinese. Actually, they are still booming. And they have already survived even someone like in Ethiopia. They survived a very treacherous domestic political situation. And they are able to grow. So even when you see the investment number, but we know actually the FDI statistics is problematic because a lot of them may go through like a Virgin Islands, go through Hong Kong, and go through these tax havens to Africa, or they actually may be reinvested from the Chinese projects there, then further to Africa, its domestic market. But when you go on the ground, because last year I went to Africa after the COVID, what I found is actually Chinese companies, especially actually the private manufacturing companies, they are more confident of Africa and also more experienced. And I think they are actually the driving force for this export of Chinese machinery and this industry products there. Because when you see the their consumer market, today they are not simply like just importing Chinese goods, but they are actually buying their cell phones which are assembled like in Ethiopia. And in Transition actually have a number of assembly plants in African countries. So the import, they are going to go there and the import are just components. And then what the African buys is actually the products assembled there. The same is also for plastic and the lot of textile products. They are not totally like imported from China with complete products, but the Chinese export to them are just like semi-finished, and they will do the last step or several steps processing in Africa. And I see this actually as a positive step for local industrialization. And China actually saw such a stage of development in the 1980s and 90s as well.